Hey everyone, welcome back to my channel. If you are new here, my name is Carla, and in today's video, we are diving into the smartest financial strategy to boost your financial freedom. Today, we are unpacking two powerful strategies, which are infinite banking and velocity banking. If you are aiming to optimize your personal finance, stay tuned. Don't forget to like this video, subscribe to my channel, and let's explore which method could work best for you. Ready? Let's get into it. First up, what are these concepts? Infinite banking involves using a whole life insurance policy to create a personal banking system where you can borrow money and gains the policy cash value. On the other hand, velocity banking uses a line of credit to pay down debts quickly, leveraging the flow of your income and expenses to minimize interest costs. While not specific institutions offer infinite banking as a product, it is largely supported by insurance companies that provide dividend paying whole life insurance. Velocity banking, however, can be utilized with any financial institution that offer a flexibility line of credit like banks or credit unions. Okay, infinite banking centers around whole life insurance policies, whereas velocity banking primarily uses HELOCs, which is home equity line of credit, personal line of credit, or large credit card limits to manage a pay down debts. So basically, when I say credit card limits, is you use the strategy of zero APR that some institution has this offer. You get a credit card with zero APR or a low APR that can help you pay off a significant chunk or the pay off the debt that you have in another product or another loan or something like that, and that way you can save some in interest rate. As for the benefit of infinite banking, basically you grow cash value that compounds tax deferred. Another one is access to cash with no credit check because you can borrow money against your own policy. Another one is financial legacy and death benefit protection. On the other side, some of the benefit of velocity banking is basically you can reduce mortgages or debt repayment period, because when you get this line of credits approved or these zero APR credit cards, you can put it toward your debt or mortgage, and you can save some time and pay off that line of credit that usually is a better rate than the mortgage or the loans that you have initially. Another benefit is save significant amounts in interest rate when you do this or you use this strategy. And another one is basically you improve your cash flow management, because with this strategy you have to learn how to manage all of your finance, your income, expenses, and all of those things. And it's like a game, it's like a puzzle that you can is gonna help you understand better and manage your finances better. Are you finding this comparison helpful? If you do, smash that like button and don't forget to subscribe to my channel. Also, please check out my free VIP group, and I will leave the link in the description box below for a dive deeper into financial strategy. I will see you there. Coming back to the subject, some disadvantages of infinite banking. The first one I will say is requires significant upfront capital, because because it's a whole life insurance. You have to put a chunk of money down on your policy. That way you can eventually can borrow against. So yes, you do need a significant amount to put down on your policy, but at the end of the day, you can benefit from it. Another one is complex to understand and manage. This can be really difficult to understand, but as soon as you get the point and get it, understand it, you can benefit from it. Like it's gonna be a huge deal. I can tell you that. Another one is a long-term strategy without immediate liquidity. So basically, in these terms, is some of the company depend of the company that you get your whole life policy in, but you have to wait at least 1 year or more. It depends of the terms, but unless you put a chunk of money on your policy initially, you have to start making monthly payments until you have a specific amount that you can borrow against. So basically, yes, you have, it's not a immediate term, immediate benefits that you can see, but at the long run, it is really, really, really good strategy. On the other side, the disadvantage of velocity banking, you will say it requires disciplined cash flow management, which is really a disadvantage. But the reality is, you have to be disciplined with your money. You have to be disciplined with your finance, personal finance, business finance. It doesn't matter. You have to understand. You have to learn how to manage. You have to educate yourself. So yes, it is a disadvantage if you don't do it right. Another one is there is risk if income is unstable or expenses fluctuate, meaning because you are borrowing or you are getting a line of credit, obviously you have to pay down that line of credit. So in monthly basis, you have to pay at least a minimum amount due as a minimum, or as much as you pay, even better. But if you don't have like a stable income that you can calculate or you can put in a budget and pay in a monthly basis and get this going, then you might have a lot of issue in the near future. Another disadvantage is potentially high interest if not managed properly. So you have to be aware that if you get approved for a line of credit, you might have to have a good profile, a good credit score, something like that in that matter, for to get a good interest rate. Because other than that, you might have a high interest rate if you don't manage properly, and that won't be a good way to use this strategy to benefit you. So infinite banking is ideal for those with a stable, sizable income who can afford a higher insurance premium and are looking for long-term financial growth. Velocity banking suits those who are more focused on quickly reducing debts and are comfortable managing line of credit. To engage in Affinity banking, you will need a good credit score for initial approval of a whole life insurance policy, often influenced by your financial stability. For velocity banking, securing a HELOC or a credit line typically requires a good credit score too, a steady income, and in some cases a home equity. So, how to maximize infinite banking? To maximize the infinite banking, consistently fund your policy beyond the minimum and borrow wisely against it when it comes to it. For velocity banking, use the line of credit wisely to pay expensive and pay it down rapidly with all available cash that you might have. Then repeat the cycle to reduce debt swiftly. So one example of infinite banking is, let's say Maria, a doctor, funds her policy for 10 years, borrow against it to help her children's college, repaying the loan on her own terms without traditional student loan. This is a great one. In one example of velocity banking, basically, let's say Jones used the HELOC to pay off his 30 years mortgage in just 10 years, savings tens of thousands in interest by making large strategic payments toward the principal when his cash flow allows. This is another one good example. So as an overview, both infinite and velocity banking have their places in personal finances depending on your financial goals, your discipline, and economic situation. I mean, it depends where you are in your journey, but which strategy appeals more to you? That's the question. Do you see yourself as your own banker, or someone is slashing debts rapidly? I mean, again, it's depend of your journey, but I would love to hear from you and see where you at and if you have tried any of these strategy, and let me know how it's going. Thank you for tuning in. Remember to subscribe to my channel for more detailed financial strategy videos, and check out my free VIP group that I will leave the link in the description box below for more personal guidance. See you in the next video. Bye.